that the Reserve Bank is at work and in mission mode, monitoring the evolving financial market and macroeconomic conditions and calibrating its operations to meet any need for additional liquidity support as well as to undertake other measures as may be warranted. It is our effort to ensure normal functioning of the markets, nurture the impulses of growth and preserve, I repeat, and preserve financial stability. Incidentally, we have in RBI quarantined 150 members of our staff and service providers together with the IT facilitators and the entire IT facility as a part of our business continuity plan. The plan was prepared and executed in a matter of days. The MPC noted that global economic activity has come to a near standstill as COVID-19 related lockdowns and social distancing are imposed across a widening swath of affected countries. Expectations of a shallow recovery in 2020 from 2019's decade low in global growth have been dashed. The outlook is now heavily contingent upon the intensity, spread and duration of the pandemic. There is a rising probability that large parts of the global economy will slip into recession. Turning to growth in India, the implied GDP growth of 4.7% in Q4 of 1920 in the second advance estimates of the National Statistics Office, which was released in February 2020, within the annual estimate of 5% for the year as a whole, is now at risk. As regards the outlook for 2021, apart from continuing resilience of agriculture and allied activities, most other sectors of the economy will be adversely impacted by the pandemic, depending upon, I repeat, its intensity, spread and duration. We have to recognize that the government has taken timely and appropriate measures to contain these three factors, that is to contain intensity, spread and duration. And let us all cooperate with the measures announced by the government to deal with the problem, to prevent the spread of coronavirus, to contain it and win this war. If COVID-19 is prolonged and supply chain disruptions get accentuated, now these are risk factors which I am listing out. It all depends how we respond to the situation. I'm just listing out the risk factors. Only time will tell how effectively we have acted as a nation and how effectively we have been able to contain the spread of coronavirus and how effectively we have been able to restrict its adverse impact on our growth. So if COVID-19 is prolonged and the supply chain disruptions get accentuated, the global slowdown could deepen with adverse implications for India. The slump in international crude prices could, however, provide some relief in the form of terms of trade gains. Downside risks to growth arise from the spread of COVID-19 and prolonged lockdowns. Upside growth impulses are expected to emanate from monetary, fiscal and other policy measures and the early containment of COVID-19. As regards inflation, the prints of January and February 2020 indicate that actual outcomes for the quarter are running 30 basis points above our earlier projections, reflecting the onion price shock. Looking ahead, food prices may soften even further under the beneficial effects of the record food grain and horticulture production, at least till the onset of the usual summer uptick. Furthermore, the collapse in the crude prices could work towards easing both fuel and core inflation pressures depending on the level of pass-through to the retail prices. As a consequence of COVID-19, aggregate demand may weaken and ease core inflation further. Heightened volatility in financial markets could also have a bearing on inflation. Given this heightened volatility,